Good morning, everybody. It's Friday, July 18th. Welcome to my channel. Now, yesterday we broke out of balance. Okay, broke last week's highs in the ES, crushed last week's highs in the Nasdaq. Okay, now the market started off like not that strong. All right, tech was ripping, right? Microsoft was ripping, and you got the pullback, and that's the pullback I was waiting for. And I just picked the wrong asset, to be honest with you. I should have longed the ES or SPY, and instead I longed AMD, and I kind of went against. I'm going to get into some expected move talk in a little bit. I went against the expected move. Now AMD is way over its expected move for the week, way extended, okay, and it gapped up. So as soon as I got in, I got a push. I scaled a little off, and then it just started to 160 is a huge gamma level, and it died. And so I cut it for a little win. Okay. Then I forgot to update my channel, but then I got long on Google and didn't love my entry, and then that winded up being a nice trade, but I cut it flat. Okay. Now the reason I really wanted to get into ES today, yesterday, was because of ultimate balance, and there's a big chance we trend higher, and that's what happened. Okay, I did wind up shorting AMD. Got a decent. I only did half risk off that 160 level. So once it hit that level again, I shorted it. Got the move down. Broke low a day. Decent trade. Decent trade. So that was going down while the market was going up, right? Based on overextension and stuff like that. So, like I said, I'm going to go over slightly a couple of stocks that are overextended. We'll look at them together. Okay. And today we have Michigan consumer sentiment at 10 a.m. That definitely moves markets a lot. All right, that's at 10 a.m. We do have low volume right now. All right, it's Friday, still the summer. I don't see any Trump stuff today, but he could definitely post something. It is OPEX. Okay, it's the monthly expiration today. So I'm going to be looking out for large gamma levels. Okay, and haven't done butterflies in a while, but how OPEX works, you usually get early volatility. And why this is significant, it's a monthly expiry, right? So a lot of money is going to come off the table today. I didn't look at it. It's usually trillions of dollars. So what happens is in the morning you sometimes get volatility, and then as you get into the afternoon, these large gamma levels sometimes take over and they pin at certain large gamma level strikes. Literally the stock will literally just pin there and just trade in a very small range and pin. And I've seen it happen where to the tick at the close, it literally boop, it pins to that strike. All right, so I haven't run gamma levels because I'm running them at 9 a.m. But I have some big gamma levels in some stocks, so maybe they'll pause. I don't know. Um, that's what's on the on. That's what I'm talking about today. All right. So OPEX. It's Friday. It's July. Right. July. I've been saying this is seasonally bullish. This is the month where you usually get a rise. We had. Okay. But then the market tends to take a little dip August, September, sometimes into October. Okay. Seasonality. That doesn't mean it has to work, but seasonality has came into play in July. Now we're in earnings season, right? So Netflix reported they beat, but their margins guidance I believe is lower. So the market didn't like that. Okay. So without further ado, let's get right into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile and buyer profile to find structure in the markets along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That's my edge. Okay, that's my edge. And I also use anchored view ops, and I use my market internals. Market internals is what's under the hood of the markets. What's the guts of the markets? What is the market capable of doing? What is the market capable of? Right? Now, hopefully, you join me every morning. Give you the market story, give you the economic calendar, the market news, the earnings, leaders and laggards, then followed by a bunch of technical analysis, and then I give you, on a silver platter, the ES and the NASDAQ futures analysis. Okay? The ES and the NASDAQ futures analysis with long and short trade scenarios. Okay? Now, when the market opens, new data comes. New data of what's going to drive the market, what we don't know yet, comes up, and then a new plan forms. Okay, and that's where I use my market internals. And if you want to hear that live commentary, please join my Discord, Confluence Trading. Go to the YouTube homepage, click on the link, join up, sign up. Most likely going live today. I'm going live most of the days this week. So come and join. All right, come and join and see my live commentary. And I always say, use me as an indicator. All right, use me as an indicator. You don't have to trade like me. All right. One thing that I have been doing, and if you follow me, you listen to my channel, what I've been doing lately is really using my tool belt, my Batman belt, meaning I'm not cornering myself into just trading the SPY, the QQQ, or the NQ futures, ES futures. Sometimes I don't like what they're doing. And again, I know like a bunch of stocks that I chart, have gamma levels on them, have TA all about them, and sometimes I forget about that, and then the post market I'll look at it and go, wow, that was the long, that was the short in that stock, but the market did this, right? So you can look at my Discord. I forgot to put the meta trade I did the other day, but which was a good one. I've been in Google, I've been in Microsoft, I've been in Meta, and yesterday I shorted AMD, right? So when the market's not very easily tradable, when I don't like what I'm seeing, then I go to a stock that might have relative strength. Maybe it has a catalyst. All right, like Google, I've really been liking Google, and Google has earnings next week, so it's kind of having an earnings run up. Okay, gave you a beautiful setup yesterday because it sold off from the open, and I've missed my entry at 182, and then I had a entry a little higher than that, and it did wind up working beautifully. It's just that I cut it because I wasn't happy with my entry, but that was the entry. 182 gave me a bunch that was basically holding the previous day's lows. Okay, so I scan every morning, and I don't scan a lot of stocks. There's not many that I'm going to trade. Okay, so just something that I'm doing where and sometimes you get the bigger moves in stocks. Like I had a trade in Meta on Tuesday that went like almost $3 the Nasdaq and the SPY only went like $1. Right? Meta's a wild beast, but if you catch a nice trade, it can run. In Microsoft as well the other day. Okay, just putting that out there. Just putting that out there. All right. So I'm expanding my. I used to trade stocks every day, and it stressed me out a little bit in the past. But now I'm a lot more patient. So now I just set alerts. They don't come to the area of interest. I don't even look at them. Before I would be staring at something. I'd be staring at it. Right? just got an alert that a large buy. I don't even know where that even is. All right. Anyway, let's move on. Let's move on. Let's get into the watch list, the futures watch list here. I don't know how much I'm expecting today. Do we get continuation? Right? We have to see. Now, crypto is all about this going wild here. I know XRP quote a bid. That Genius Act was passed. I'm not gonna lie. I don't know a ton about it. All I know, it's positive, right? And let's see here. Ethereum up 5.67%. Crude is catching a bid. Okay, almost up 2%. Silver, loving it, up 1.17. Gold up 0.60. Russell up 0.47. 30-year bonds being bought that should send yields lower. Bitcoin up 0.31. The Dow is up 0.12. The ES is pretty much flat. Nasdaq's flat. VIX is flat. 16.5 VIX. Dollar's down 0.53. And the yields are lower, down 0.85. Remember, those yields are you can't get out of its way, right? Here we go. Where's the Bitcoin proxy? Coinbase. I looked at that yesterday too, and it was pulling back to the previous day's highs, and that was pretty decent trade. That's up 2.57%. That's your Bitcoin proxy. Then you got GE up 0.76. There's your Google. There's your Google. Report earnings next week, I believe. All right, up 0.70. Tesla up 0.63. 320 is a pretty nice size gamma level in Tesla. Eli Lilly took a blood bath yesterday. Now, we're going to get into those expected moves. Remember I said that. Expected moves. I have a script. I ran it over the weekend based on last Friday's close for this expiration. And it's pretty crazy. Those ranges, 70% of the time, the stock will close within those ranges. 70%. So, when you hit one of those levels, you wouldn't want to short at the lower end of the expected range. You wouldn't want to long at the higher. Okay? There's always outliers. Nvidia up 0.43. Apple's up 0.26. Got a bunch of positives here. Your laggards, Netflix, like I said, the market didn't like the margins for the guidance. Okay? Top sectors. Let's just look at it real quick. Chevron up 3.79. The laggard is Procter & Gamble. And PepsiCo had a monster run yesterday. Monster. I've been holding that thing. Added to it. Right? Finally got the pop up. All right. Sold some covered calls on it yesterday. So, finally that thing had some life. Okay? Now, if we want to get a little granular, let's see who's moving markets. Hess, Chris Therapeutics, Hood, Robinhood at the top of the list. Who's lagging? Lucid, Whirlpool. I think that's Western Alliance, a regional bank. Spotify. That's your negatives. Okay, that's your granular list here. We move on to sectors. Energy, leading the pack. Like I said, up 1%. Up 1%. Followed by financials up 0.19, semis up 0.15. This is market's very muted this morning. Very muted. Okay, there's no laggard. Communications, this is flat. All right, moving on. Moving on to the economic calendar. We do have something on the docket today. We have Michigan consumer sentiment. Okay, consensus 61.5, previous 60.7. That does move markets generally. Okay, so if I'm not in something by 9:40, 9:45, I will not touch that market until about 10:05, 10:10. Okay, and it's Friday, folks. It's OPEX. All right, I'm hoping not trading anything. If I don't find anything by noon, I probably should just wrap up shop and come back Monday. Okay, let's look at some news here. Netflix stock fell 1.7 after the streaming giant's second quarter earnings and outlook were solid but failed to live up to heightened analyst expectations. American Express rose 1.8 after the credit card behemoth exceeded estimates. 3M stock rose 2.8 after the industrial giant raises full year profit forecast. Chevron, here we go. Stock rose 3.1 after CNBC reported that the oil major has triumphed in mediation against its rival Exxon. Now, here's the reason why Hess is moving. I'll say it because it says here it owned the right over certain oil fields in Guyana, allowing Chevron to move forward with its 53 billion acquisition of Hess. There's the mover for Hess. Robinhood and Coinbase Global both gained this after the U.S. House of Representatives passed a bill that would develop a regulatory framework for cryptocurrencies. All right, there's the news there. More news. Let's see. Fed rate cut delay intact as inflation fears override Trump's pressure. Squid Game boosts Netflix quarter. Chinese Commerce Minister discussed foreign investment AI at meet with Nvidia CEO. Wells Fargo exit ban revised fears about doing business in China. Anything else here? We have Abbott Labs. Jeffries raised the target price to 145 to 43. Netflix got a target raise to 1450 from 1440. PepsiCo got to raise the target price to 157 from 139. Loving it. All right, S&P Global. Jeffries raised the target price 625 from 590. Okay. The juice. Let's see what we got here. Fed Waller speaking now. Do we have Trump today? Yeah, we do have Trump today. Trump in swearing in ceremony for IRS at 1:30. Trump signing ceremony for Genius Act 2:30. Okay. Yeah, really don't want to be in the market afternoon. I really don't. What else here? We do have upgrades down. What the heck happened here? Upgrades. Let's see. That's a poor list. Boy, is that a poor list. Horrible list. Doesn't matter. There's not much. I checked it out already. There's not much today. Okay. Moving on. We're going to move on to. Let's go to market internals recap. All right, market internals recap. Earnings. Don't really need to look at that now. I'm going to actually close that window because we can move on to earnings for next week, which I believe has Alphabet, Google. All right. Now, let's get into the market internals recap here for yesterday. All right. So here's the weighted AD. That's the indicator I use. Market internals is this whole window. It tells me what's going on. Now, if you want to look at something here, 6,300 is the huge gamma level, positive gamma level in the SPX. That's where we stopped yesterday. 6,300. Okay. And you can see tech, all green except healthcare. Eli Lilly took a bloodbath yesterday. Okay. So the market in the morning was strong at the gate. See, then it got weak. And equal weight was lower, it was below zero. But then once this happened, equal weight right here, then it started to go up the rest of the market, and that's when the market just started to just trend higher. Okay, if you look at these ratios, very important. NYSE, 2.3 to 1 volume going into up stocks versus down stocks. NASDAQ exchange, 3.3 to 1 of volume going into up stocks versus down stocks. That is very bullish, folks. Okay, those are very bullish numbers. That's your market internals recap. All right, now let's get into daily charts. Then we'll get into the expected moves. All right. This is SPX, so hold on a second. Let me put up SPY. All right. You can see right here, expected moves to the low side, expected moves to the high side. I have a bubble here that tells me the range for this week was supposed to be 1636. 1613 to 68 downside, 63.56 to the upside. We are inside the expected range for this week. Okay. We are inside the expected range for this week. Now, zoom in here. We were in balance for a while. We broke balance yesterday. Not by a huge amount, but you see we broke last week's highs. Okay, where are we now? 628.71. 628.71. We are we are above, slightly above yesterday's highs. Okay, slightly above yesterday's highs. Do we get continuation today? We haven't got that. We've came up here a little before and we failed. I don't know, right?
Large buy.
I don't know. So we're gonna look at futures. Let's do it. So there's your futures. See, we came all the way up here, got a kind of wick, little bit of a doji now, holding last week's highs in futures. So just to see what happens. Q's had a nice move, right? You just took out the last 2 days highs, right? And you held support right at last week's highs. Right at last week's highs. Now Taiwan Semiconductors had a nice earnings that helped some semis, right? So there we go. Where are we at now? 562. 562 basically. We are like right here, still like near the lows, near the close of yesterday. Near the close of yesterday in Qs. Let's look at that NASDAQ futures. We can just see a nice what's going on here. Yeah, look at that. Wicked up. You're now trading towards the lows of the overnights. Okay, like I said, you're right at the close of yesterday. Over last week's range in futures. Over last week's range. Big balance breakout, right? Remember I said ultimate balance. You get big moves. You get big moves. Okay. Now, let's go into the futures. I'm sorry, not futures. Triple headed monster. That's what I was talking about. Sorry, apologize for that. Got a little hiccup there. Let's look at the bond market. That's just not doing anything. See how it just like goes down, goes up, pushes up. Now you have 3 days down where yields are going
Large
down.
sell.
So that's people buying bonds. You broke this downtrend. Get rid of that. Okay. You're at the anchored VWAP of this year. Really nothing to see here at all. I don't know if I put this up. Maybe I did. Maybe I didn't. All right. Moving on to dollar. So dollar's in a range. Okay. You broke the downtrend. You're holding last week's highs. All right. Consolidating now. All right. Let's go to VIX. Remember, this is 30 days out. Let's look at that VIX. Spiked up. We're back at under 17 VIX to 16.49. 16 VIX is a one expected move plus or minus in the SP 500. Okay. Now, we're going to get into expected moves. Okay. Expected moves. Let me pull up this watch list. Actually, I'm going to pull up this. Let's see here. Okay. I'm going to show you. This is my indicator, right? This is Boeing. We're just going to alphabetize this. Notables here. We're going to go through some tickers. Okay. And you can see the green to the upside is the expected move. That's the expected range, the green and the red. Okay. Just notice. I'm going to go through some. AMD. See how it's over its expected move? The expected move was the 154.08 this week. It has exceeded that. Notice that's used it as support. Now, when you go over it, that could be a sign of bullishness, right? Because it's going over, but we're way extended. Okay, way extended. All right, that's number one. Amazon is within its range. It's right there. It's not even doing anything, right? Look at Broadcom. Notice where it had issues. Right at the expected move. Pretty cool, right? So, oops, sorry. I don't know why why so many stocks are doing that, but let's look at Coinbase. It's annoying that so many stocks are doing that. Look at Coinbase, almost at its expected move. Okay. GE. I don't know why I gotta do this. Look at that. Almost up to its expected move. Google. Google's in the middle of its range. JP Morgan. That had earnings. That's why that range is so big for the week. Eli Lilly. This is one. Look at where it landed yesterday. Right on its lower end of expected move. Also, obviously, got confluence here with the previous week's lows and its support, right? But still, right to that expected move. Pretty crazy. Okay, pretty crazy. Let's look at Meta. There's the lower end of the expected move. And the black, just to let you know, that's the close of last Friday. Okay. Microsoft. Where did it go, folks? Look at that. Look at that. Right to its expected move. Pretty nuts. Now, the reason why this works is because it's the options market is pricing in these moves. It's the options market. Okay. Netflix. Now, this had earnings. So the expected move was huge. Look at this expected move this week. Look at that range. All the way up to there to down to here. Just because of earnings, okay? Nvidia. Notice where it came up to. Monday, expected move. Tuesday, expected move. Right? You close a little above it, but it's extended. The options market didn't price in to go much higher than this. Tesla. In the middle of its range. Okay, now the reason why Tesla is having some issues, 50-day moving average, 200-day moving average, 20-day moving average. Okay? It's got a lot of crap going on with it. That's why I've kind of avoided the day trading it. Okay? I avoid day trading it because of that. So that's what I'm doing in my analysis is I am looking at those daily charts for the day trading, and that's how I'm filtering them out. I'm like, dealing with the 200-day moving average. This is like, I don't want to really deal with that. All right, that's just this expected move. I just thought that's kind of cool. Now that's the main thing I run every week. It's a Python script. So it paints it on, and then it makes my indicator, and I paint it on the screen, and then that's it. I don't have to do anything. Okay. So that's it, folks. That's the expected move for you. Today, the hourly chart doesn't have much for us to really look at. I think we're just going to go right into the market profile and volume profile analysis because we broke out of balance. There's not much nuance. This market hasn't done much overnight, and we'll get into it. Okay, give me a second. I'm going to bring up my workspace. Alrighty. This is your market profile and volume profile analysis. All right, let's get my marker out.
Large cell.
All right. Here we are. Here we are, folks. And what are we going to do? We're going to look at that composite volume profile on the side of the rolling week. We had that sell-off that one day. That's our excess to the bottom, and we have value area, right? Then we have excess to the top. Still pretty balanced, right? Now this looks like the auction could be complete. So what does the market need to do? Remember, ultimate balance is 63.03. So what that market needs to do, this is the most traded price yesterday. You can see the volume, right? It needs to eventually move this, it needs to have value follow price. If that most traded price becomes this around 63.41, then the market can move higher. Okay? If price and value cannot follow price, price returns to value. That's a basic as you can get. It's beautiful. Okay, it's beautiful. All right, now, real quick, what did we do yesterday? What did we do? Well, we opened up. We pushed up. We pulled back. Where? To the previous day's highs. That was support, and then we just ripped. We had one little pullback, and then it was trend, trend, trend. Okay? Okay. Currently, we're right at yesterday's highs in the futures. Right there. Okay? We were gapping up, but now we're there. All right? Now, as far as levels, we do have a little supply zone up here. Now, this is an all-time high. So, little tip, all-time highs are generally not made in the overnight session. I would think this gets taken out. You usually don't have an overnight high as your all-time high. Okay? So, that's important. Let's mark this off. There's a supply zone there. Okay, and there's a little demand zone here at the overnight lows with yesterday's highs and the most traded price of yesterday. Okay. Now we always want to mark off the 50% retracement of yesterday. That's 63.24. 63.24. We'll line that up with yesterday's value area low, 63.19. Now, ultimate balance level, you have demand right on it. Right? So we're going to have the big demand box, and then we'll highlight the 63.03. You want to stay above this level. Now, you did just break out of balance. That 63.41 was a key level to break. Okay? You look to the left. We only broke it by a little bit yesterday. But in the overnight, you did. This is last week's highs. We're now above them. Okay? One thing to note here. We opened, let's open this up. Okay? We opened here. And we're pretty much 100% net long, but we're in the middle of the range pretty much. You could see if you want to talk about a pattern, and this is like a head and shoulders. It did break the neckline here and bounced. Okay? So we're just gonna get right into scenarios here. No use of like sitting around and chatting. All right, let's just get into it. Of what I'd be interested in. Could we melt up today? Possibly. Right? Could we fail? Possibly. Michigan consumer sentiment, I think, is going to have a lot to do with it. Okay. So, a mini bull bear line would be your 63.41, 63.42, your most traded prices yesterday, right here. Right? So, if the most trades took place yesterday, you can see the high volume note here. Right? You want that defended. You want that defended. Okay? Because you know longs are here. They haven't got hurt yet. So that level of 63.3875, the overnight low, becomes very pivotal. You need that to hold. You do have last week's highs right there. So, what could I think could possibly happen that I would be interested in? Maybe we push up. All right? And then we pull back. If it's perfect, you get one of these. You hit the close of yesterday and the most traded price, and we melt into the weekend. Now, what else could happen? Maybe a bear trap, right? Break the overnight lows, and then do this. Come back to last week's highs, and then if you reclaim it and hold it, you could do the same. Make new RTH highs. Okay? That is A pluses for me. That is A pluses. Okay? A little bit trickier would be if we rip down to the 50% retracement, right? Back into yesterday's range. This would be a little tougher to want to get long. It'd have to be quick. But I'm not in love with it, right? Because we're at balance highs. We're still not like crazy high off the balance highs. We start going back into range. Longs from here will be like, you know what? I'm going to take my profits. Maybe we correct the down here. So that's all I'm interested in as far as longs. Now, one other scenario, let me just put it back here, is we could take out the overnight highs, right? And let's say we do this, we come back and we test. That could also happen. All right, so we're going to go into short side. And need to see a lot happen here. We do have supply here. A lot has to happen. Okay, really with this overnight low. Now, here's one case. We can come up, break the overnight highs, set new RTH highs, come through the open in the early, put in some lower highs, come through the most trader price of the overnight. Now here's your test. Remember, that's the mini bull bear line, right? 63.42, and the overnight lows is 63.38.75. If you take that out, you might get a little bounce here, but if you start to hold, we could really rip down at least to the 50% retracement, the Fibonacci of yesterday's range. This is where the rubber meets the road here. Okay, you're now coming from balance highs back into range, and bounce rules could take over, and we could very well find ourselves at 63.03. We could bounce, and that could be the weekend. But if this market got weak and you started to go boop, boop, you go back to balance lows. Okay? So that's one. Number two, what could we do? We could just drive under this, push back. If it holds, then you can go down. That's it for the ES. Okay? That's it. Look at the NASDAQ. Let's bring that up. Same thing. Overnight highs is in the overnight session. Okay. Let's look at that profile. Profile has a distribution here. Right? Then we have single prints. Right? Now we have another distribution. That's your most traded price of the week, 23150. And then we have your 230, the most traded price of the month. Then you have excess. So a bunch of distributions here in NASDAQ. Same exact structure. Okay, same exact structure. Well, not exact, because you have a poor high at the top. Okay, now that poor high is looking like it wants to get broken. That is begging to get broken. Okay, so midpoint. I'm going to put these single prints. That's one-way action. All right. Line it up with the value area low and the midpoint of yesterday. So this bracket right here is going to be defense as well for the market. Okay. Then we have your right here. You have almost a triple top. It's called a poor high in market profile. You could see 3 30-minute bars are stuck there. That means longs had poor location at the top. This is not institutions. This is little guys, the weak hands like me and you. So this little exact level here is the small time people, right? Not the higher time frame people, the long term time frame traders like institutions. They don't give a shit about these levels at all. They don't care about these. It's weak hands there. Okay. So we're going to put this here from the supply. We're going to big time defense is right here. Most traded price of the overnight, most traded price of yesterday, and this little demand in the overnight low and the close. Okay. We also have our most traded price of the week, that 23150. And we have yesterday's lows as a nice demand zone, and what's in there, that's your last week's highs. And of course, we have not ultimate bounce anymore, but it's 230. That's been a monster level. Okay. Not sure I'm going to have to talk about everything in here, but let's break out the session and we'll be done with it. Okay. Okay. So let's start with the scenarios. Okay. Okay, starting with the bull side. Remember, overnight highs are usually not real-time trading hour highs. Okay, so here's your immediate bull bear line, right? It's your 23255. Overnight lows 2324575. Okay, same scenarios. That's the beauty about this. The same scenarios. Okay, let's say we play games off the start with the market, come down to this demand and bounce, come back up, hold yesterday's most traded price, then we can break that triple top here and start to melt up into the weekend. Okay, this next move would be little bit of a bear trap if we just ripped, and the market's not that weak, but we ripped into these single prints anywhere in this box. If it gets support and it holds, you go long. Okay, look at what's gonna happen. We can just push through that supply, break highs, and then get some type of pullback to melt into the weekend. Okay, anything below this, the market's going to be a little weaker. So down here at the most traded price of the week, you could get a bounce there, but think about it. If we're all the way up here and you have poor structure here, right? You have single prints. Yeah, it could bounce here, but honestly, for myself, this is all I care about. Comes down to here, I'll probably be in noon or something, and I just won't like it. It would have to like literally go like this for me to be involved. All right, so that's it. That's for the long side. Short side. Now we are from balance lows. Highs are getting paid. Lower high, lower high, lower high, lower high. We're not at balance highs anymore. We're above that, right? So do people take profits today? I don't know. I don't know. But what could happen? We could push up, break the supply, make new all-time highs, then come through not the open necessarily, then make some lower highs and start to challenge this level of most traded price yesterday. That's your confluence low with the overnight lows. Remember, these are longs. We know this. If you come through, you can see the high volume node here in the profile. If you come through that, you are going to test these single prints. Now remember, single print support is bullish. But if the market is very weak and we're like, uh-oh, people are taking profits now going into the weekend, you're going to rip through these and you're going to test a 2, 3, 1, 5, 0. There is demand here. Okay? There is. But if you do this, that's last week's highs. It could get scary here because you got more single prints here. If that happens and this market just starts going, okay, we're going to take profits. Remember, we're a little past the middle, 3/4 into July. Market is usually bullish in July, but it could bottom at the end of July. I don't know. Bottom's usually like it usually gets a little weaker in August, September, okay, October. But who knows, right? This could be it. It could bounce from here, but what if it goes back to 230? That could happen because we come back into range. Under this would really come back into the balance range. Woof. Woof. Right? Also, we don't have to come up there. Let's say we just drive, break that, retest that, and the market's kind of weak. You could also get that move. Okay? But I'm going to lean bullish unless the market shows me otherwise. All right, that's the analysis for today, everybody. So if you enjoyed that, please smash that like button for me. That'd be much appreciated. All right. And remember, hopefully you join me every morning. Give you the market story, the economic calendar, the market news, a bunch of technical analysis. Yes, documents. Documents. Are you going to be in the room today? You were MIA yesterday. Are you a trader today? Yes, sweet. Now, have our plan. Okay, we have our plan. I like it because the plans are very similar. Structure is different, meaning how far the Nasdaq is up compared to the ES. But as far as the little game plan I just gave, they're very similar. Okay, they're very similar. All right. So if you want to join me and join documents, and right, come to my Discord. Come to my Discord. It's called Confluence Trading. Okay, come to my Discord. Go to the YouTube homepage, click on the link, and sign up. Join the community. Join documents. I'm sure documents can give you some verification that I'm legit, right? That I will use me as an indicator. Use my commentary, right, to trade the markets how you see fit. But the markets are never a mystery, ever, with internals. Okay, they can't outperform their own internals. All right. Now, in the big scheme of things, right, you have catalysts that move markets that can ignore TA, right, for the second, right. Then you have structure. Structure's king, right? So structure, the market moves on structure, like higher time frame structure, right? Then you have a little more minutia, a little more granular stuff, right? But structure is always king. But when the market opens, there's context to what's driving the market, okay? And that's what I provide in the Discord. The granularity, like, oh, communications is doing this. Ooh, tech is this, but this is happening. Ooh, man, this market's mixed. It's not that strong. That's what you'll get. You'll get major levels when I'm talking about, like the 230 from the other day, the NASDAQ. VPOC week, VPOC month. Those are walls. Those are walls. They're magnets. They're decisions. There's. You don't mess with those VPOC levels. Okay, you use them to gauge sentiment. You use them as market generated information, whatever the market does from them. Markets move from VPOCs to other VPOCs. In between VPOCs is a trend, because that's all markets do, is they base, consolidate, trend to the next base. That's all the market does. It's either expanding, contracting. That's why I love VPOCs, right? Because you can have a VPOC of a day. You could have the VPOC for the week, or the month, or the year, right? And so every VPOC is what I just said, is your base, is your magnet, your wall. And once you hit a wall, you tend to hang out there. You hang out there for a little bit because the market is agreeing on that price, and the market is seeing that, whoa, a lot of transactions are happening here. It's like you just hit a bottleneck in traffic in a car, or gridlock. Okay? And then, oh, wait a minute. Wait a minute. If we break out of that, maybe retest that, then we trend. Or if you staying there, you go above it and crack through it, retest it, then it's telling you, uh-oh, we're probably going lower. So it's a roadmap, all right? It's a roadmap. Anyway, everybody have a great weekend. And hopefully, if you're not in my Discord, I'll see you Monday. If you are in my Discord, I'll see you at 9:45, most likely. All right? All right, everybody. Take it easy.